Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Friday, the 15th of July. Starting off with the FTSE 100, and looks as though the market a little tired there after the surprise no rate cut that we saw on Thursday. Still aiming for the 6,800 target, which is the top of this February price channel, but given that rather nasty looking candle yesterday with the close near the low of the day, one might suspect that this market needs to consolidate around the 6600 zone. Former initial resistance for July 6612, so that would be an initial target there. But if you are bearish, it might be wise to wait for an end of day close back below that before assuming that this market has finally topped out. Onto the DAX, and this relatively outperforming the FTSE, given that there wasn't a negative there on the fundamental front. Good close right on the 200-day moving average, and that was the first target there around 10,068. Next level up, 10,104, which is probably always was the beeline for this market to make at the top of the gap from June. And then after that, up to 10,400, the top of this wide rising trend channel from the beginning of the year. And the upside really here valid while there's no end of day close back below the 50-day moving average at 98.89. RSI at 57, which is right in the accumulation zone, no sign of it being overbought whatsoever. Onto the US markets, which continue to remain in ultra positive mode. Previously, it was suggested that above 18,000 we're heading up to this March resistance line at 18,800. Not far to go now. Only another less than 300 points for that target to be hit. Could be hit as soon as the end of this week or beginning of next week. RSI 67, so not overbought. So really on track for that, and that target really in focus while there's no end of day close back below Wednesday's 18,390 intraday low. On to the S&P. Here, a similar picture as far as the charting situation was concerned. Break of 2120 regarded as being the trigger or momentum trigger for a new leg to the upside up to 2200, and we're only about 36 points away from that target now, so it being reached very quickly. The only question mark with this is that this rise that we've had is so fast, it looks a bit like we're into the buying climax type of zone, and that could 2200 could unleash quite a sharp pullback, but obviously first we need to get there. So looking quite strong there on the S&P. Dips towards 2130 to 2140. Currently the accumulation zone with a stop loss back below 2120. Onto the Nasdaq, and this mirroring the old economy indices, obviously, perhaps not quite as sprightly as we've seen the S&P and the Dow. We've got resistance there from around the 45.74 level, but at least that was broken relatively easily from April. And while we're above that on an end of day close basis, heading back towards the 4700 zone, which was last seen in December. Onto the currencies, and a big day for sterling, obviously, after the no interest rate hike move. This pattern here, which going into yesterday looked like an inverted head and shoulders, has mapped out relatively well. Previously, the target, which was rather more bullish than most commentators, was for a retest back towards the 135.20 area, and we've approached that quite closely so far today, looking for that to be hit, maybe even exceeded on a weekly close basis. If we can get above that on a weekly close, then it could be back to 138.36, which was the old February support before the sellers come in again. But still the possibility, in fact, that the sterling could return back to its pre-Brexit area above 140 to 145 as a surprise for the market. Onto euro dollar, which is still relatively sidelined given all the shenanigans seen for cable and sterling. Back above the 200-day moving average at 110.90. Above that, there's a chance of a break to the upside up to 112, but maybe you'd want to wait on an end of day close above the 20-day moving average at 111.37 before assuming a decent move is on the cards here. Dollar yen, the big winner in recent days, straight move back from the 100 yen zone, hit the 50-day moving average as was expected, and could now head towards 107, 107.50, which is the top of this falling trend feature from the beginning of the year. RSI only at 58, so still plenty of gas in the tank, and it could actually then lead us to a retest of that former June resistance or above 110 over the next week or two. As for gold, still in consolidation mode, around the 20-day moving average as was hoped for. That's around the 1320 zone, but below that on a weekly close basis, the 20-day moving average around 1323 now. We risk heading back towards the 1280 area, which is the floor of this rising trend channel from the autumn. At this stage, probably the easiest way of trading this market, if you're a bull, is to wait for an end-of-day close back above the 10-day moving average at 1348 to take you up to the top of the channel and a 1420 plus target. That's it from me. More updates at the same time on Monday.